No,
You mentioned
exactly.
leverage. So are you using leverage in all of your strategies, or certain mandates have a leverage component to it?
So our covered call suite does not have any leverage in them. We do have another suite that's called the lightly levered suite. So what
Hmm.
that does is it applies 1.25 leverage to our covered call suite. So it just enhances the premium and allows you to participate a little more on the growth side
Hmm.
as the market does rally.
Okay.
So that's a
Can you?
different option, but less for advisors and more for retail clients. So
Yep.
it could be up the sleeve, yeah.
Can you explain how leverage works and how that amplifies the returns?
Yes. So in this case, what we do is straight cash borrow. So
Hmm.
we take 25% of the value of the fund, we borrow
Hmm.
cash, and then from there, just invest more into that covered call. So
Hmm.
for every dollar that we receive from the client, we're invested 1.25
Hmm.
in the covered call. So for example, if let's use USCC as an example, which are S&P 500 covered call fund. Right now, that the yield on it is 10%. So the lightly levered would be 12.5%.
Hmm.
And then it also participates more to the upside. So on a total return basis, you'll see a little more growth,
Oh,
a
wow.
little something that looks a little more like the actual equity itself versus the covered call that has a little more capping.
Okay. And how does that increase the yield payout to clients when you use leverage?
It's really just an enhancement of what we're already doing on the covered call side. So right now we're generating the 10% on the covered call fund.
Hmm.
Therefore, since you're owning 1.25 of that 10%, then you just get that 12 and a half naturally through
Okay.
the
So you
same
go.
distribution schedule, just really
Mhm.
1.25 times more.
Okay, great. So you go from 10% to 12.5%. Simple idea.